Welcome back to another video. If you're new to this channel, my name is Farhan and I help accounting students like you ace their exams. Today we have got a practice question from the topic non-current assets. In this question, you will learn to calculate the depreciation expense for multiple assets using the reducing balance method and then prepare the extract of the statement of financial position at the end of the year. You will also look into an accounting theory which justifies why we should record depreciation and also the causes for depreciation. You can see the question on the left hand side of your screen, and on the right hand side we've got all the workings which I'll go through and explain to you step by step. With that being said, let's begin. The following information relates to the motor vehicles of Frono Pte Limited as at 1 April 2020. So on the 1st of April 2020, we are given the cost of motor vehicles to be $245,000, and then we are also given the accumulated depreciation of motor vehicles to be $39,000. So based on this information that are given, we can capture the net book value at 1 April 2020, which refers to the economic benefits that are still available for consumption by the business, and the net book value can be derived as the difference between the cost and the accumulated depreciation. The cost, which is given to us at $245,000, and the accumulated depreciation is given to us at $39,000, which therefore gives us a net book value of $206,000. Okay? We are then given some additional information, and then the first requirement is to state one cause of depreciation. So let's understand the meaning of depreciation. Depreciation refers to the allocation of the cost of a non-current asset over its estimated useful life. Now, this is the simple definition that we are used to knowing, but how can we apply it on a real life perspective? So when we buy non-current assets, the purpose of buying non-current assets in our business is to help us improve our efficiency and add more value to our customers, which therefore helps us as a business to generate more revenue. So for us to achieve that increased potential in revenue and customer satisfaction, we buy these non-current assets, and through the economic benefits that are within these non-current assets, we consume them and we are able to fulfill our goal. So therefore, depreciation expense is incurred through the consumption of economic benefits within an asset, which helps the business to generate more revenue. So you could also write that and you should get full marks. So one cause of depreciation is wear and tear. So as the asset gets used within the business for the purpose of helping the business fulfill its goals, which is to generate more revenue by adding customer value, the asset loses its efficiency over time because of all the economic benefits that are already transferred from the asset to the business activities, right? So therefore, wear and tear is one cause you could mention. You could also mention obsolescence. So obsolescence, which refers to outdated assets, and this is mainly possible with technological assets which depreciate higher in the earlier years of usage, but in the later years it depreciates at a lower rate because of the decrease in efficiency. Okay, all right, so what about part B? Using the appropriate accounting theory, explain why the business depreciates its non-current assets. So we could discuss the prudence theory here, and the prudence theory simply states that assets are not to be overstated and expenses are not to be understated. Liabilities are not to be understated and profits are not to be overstated. All right. So the two main points from the entire definition of prudence theory is with regards to the assets and expenses when we are talking about depreciation. So assets are not to be overstated and expenses are not to be understated. Why? Because when the business uses the non-current asset, which in this case is the motor vehicle, for helping the business fulfill its objective by increasing more revenue, what happens is that we know the asset loses its value, right? And that value which is lost over time is stored in the expense account, which is known as the depreciation expense. So we want to make sure we have recorded that consumption of economic benefits and show it in our income statement or the statement of financial performance as depreciation expense, so we don't understate it, as a result of which profits might be overstated. Okay, so we want to make sure that loss in economic value is always captured and stored within the depreciation expense account. Then for the assets, when we don't want to overstate it, we are saying that in the statement of financial performance, in the balance sheet, where we calculate the net book value of the assets, right? So the net book value is calculated as the difference between the cost and the accumulated depreciation. And the accumulated depreciation is the total consumption of all the accumulated economic benefits that the business has extracted from that asset so far. So therefore, when we find the net book value, it makes sure that economic consumption is also accounted for, and therefore we don't overstate assets. So you could use the prudence theory and discuss what we have just discussed now and write it in your own words, exactly everything that we have discussed, and you should get full marks, okay? All right, so what about part C? Calculate the depreciation expense of the motor vehicles for each of the 2 years ended 31 March 2021 and 2022. All right, so the first financial year that we are working with in this question, is from 1 April 2020 until the end of 31st of March 2021. So that is the year one that we're working with. And based on the additional information that is given to us, let's read out the first one. On 1 April 2020, the business purchased a new motor vehicle for $10,000 in credit from Toyota Trading. So we understand that on the 1st of April, the business purchased a new asset, all right? And this new asset is in addition to what is already given to us here initially at the beginning of the period, okay? So we understand the new asset was bought for $10,000, which is the original cost, and now we want to depreciate this new asset. In additional information number 3, we know that Frono depreciates its motor vehicles at 10% per annum and using the reducing balance method. When we buy a new asset in the first year, regardless of whether you're using the reducing balance method or the straight line method, you are to apply the depreciation rate on the original cost. And in this case, we're applying the full rate of 10% because the asset was bought on the 1st of April 2020, which means it has been used for the entire year, ending 31st of March 2021. So 10% of $10,000 will give us $1,000, which is the depreciation for this new asset, okay? And we have also got the old assets, and we found the net book value at the beginning, which is the difference between $245,000 and $39,000, which gave us $206,000. So the net book value is what now we will be multiplying the depreciate rate on, and that is why we are using the reducing balance in this case. So 10% depreciation rate multiplied by the net book value of $206,000. We are mainly doing this because that is what we do with the reducing balance method, all right? So that gives us a depreciation for the old assets to be $20,600. So altogether, for the year ended 31 March 2021, the total depreciation expense is $1,000 for the new asset, which we bought on the first day of the financial year, and $20,600, which is the old assets depreciation that we calculated by multiplying the depreciation rate on the net book value, because that is what we do when we use the reducing balance method for assets that have been already purchased in previous years, okay? All right. Now, so let's look into the next financial year, so which would start on 1 April 2021 and end on 31 March 2022. And if you, before we move to additional information number 2, let's first show you some calculations so you can recall and know the exact numbers. So we are first finding the total cost of old assets, okay? So when we move to the new financial year, which is the second year, the new asset from year 1 would now become an old asset, right? So at the beginning of the question, we were given the cost of old assets on 1 April 2020 to be $245,000, and then we bought a new asset in that year for another $10,000. That means the total cost of old assets is now $255,000, and the total accumulated depreciation is $39,000, which we were given on 1 April 2020, plus an additional $21,600, which we have derived for the previous financial year ended 31 March 2021, okay? All right, so that gives us a total accumulated depreciation of $60,600. Now, why we needed to find that? Because Now that we are in a different financial year, which is from 1 April 2021 until the end of 31 March 2022, you are using the reducing balance method, so which means that you need to know the net book value, which is the difference between the total cost and the accumulated depreciation, which is what we have done here. All right. So depreciation can be derived for the next financial year ended 31 March 2022 by multiplying the given rate of 10% on the net book value, which is the difference between the cost and the accumulated depreciation that we have got. All right. And that would be 19,440 for this old batch of assets. Okay. Now, if you read additional information number 2, it tells us that on 1 Jan 2022, the business purchased another motor vehicle for $12,000 by check. Okay, so we bought a new asset on the 1st of Jan 2022, and our financial year is ending on 31st of March 2022, which means this asset was used in the business for 3 months, which are the months of January, February, and March. Okay, so the question does not explicitly mention anything regarding Frono applying a full depreciation in the year of purchase. Okay, so therefore, we are assuming that the depreciation rate of 10%, which is an annualized rate, needs to be adjusted to a 3-month rate. So how do we do that? So now that we want to find the depreciation, we take the depreciation rate of 10%, multiply it by 3 over 12, and that converts the 10% into a 3-month rate, all right? And then we multiply it with the cost of this new asset, which is $12,000, as mentioned in additional information number 2. And that gives us a depreciation of $300 for the 3 months, January, February, and March. So the total depreciation expense for the year ended 31 March 2022 is $19,440 for the old batch of assets, and then an additional $300 for this new asset which we bought. Therefore, the total depreciation expense is $19,740. Part D of this question requires us to prepare an extract of the balance sheet or the statement of financial position at 31 March 2022, showing only the non-current assets section. So when you show the non-current assets section, you will show it by including the cost, the accumulated depreciation, and the net book value for these non-current assets. In this question, we are only working with motor vehicles. The total cost of motor vehicles is $267,000. How did we find that? So we had $245,000 at the beginning of the question, and then we bought a new asset that costed us $10,000 as given in additional information number 1, and then we bought another asset which costed us $12,000. This is given in additional information number 2. So that gives us a total cost of $267,000, which is what you can see we have done here. How did we find the accumulated depreciation? If you recall, at the end of the previous financial year, after calculating the depreciation expense, we found the accumulated depreciation, and that is $60,600. And for this financial year ending 31 March 2022, this is the depreciation expense which we have incurred. Therefore, the total accumulated depreciation will be the total, sum total, which is $80,340, and that is what is shown here. Lastly, the net book value simply is calculated by subtracting the accumulated depreciation from the cost. Okay, and that is $186,660. All right, so that's how you get full marks in similar questions like this in your exam. So I believe you found value in this content. Make sure to drop a like and subscribe to this channel, and check out my crash course, which I'm offering to help you ace your exams in 2026. With that being said, I'll see you in the next lesson.